Imagine waking up to find the stock market has dropped 5% overnight. Your portfolio? Bleeding red. The culprit? Tariffs. Specifically, Trump's aggressive tariff strategy, which is shaking up the global economy like a rogue wave. But here's the real question. Is this just noise or a warning siren for something bigger? One night, the Nasdaq futures were up 0.8%, looking solid. But as the markets opened, everything flipped. Nvidia? Minus 5%. Amazon? Minus 3.4%. Even tech giants like Microsoft and Apple tumbled. The sudden trigger? A massive spike in the Japanese yen. That's right. The mysterious movement in currency markets sent shockwaves across the globe. A move eerily linked to the unwinding of carry trades. A strategy where investors borrow in low-interest currencies to invest in higher-yielding assets. Translation? Money was yanked out of the U.S. market and rushed back to Japan, sparking a chain reaction of panic selling. And this was before Trump's tariff bombshell hit. So what exactly did Trump do? Announced new tariffs on China, Mexico, and Canada. Specifically, China. Additional 10% tariffs on goods, Mexico and Canada. 25% tariffs, and also upcoming threats to Europe, Japan, and even U.S. allies. Now, here's where things get wild. The markets didn't collapse simply because of tariffs. Everyone expected them. The real panic came from who's going to be hit next. Let's break down the ripple effects. 1. Higher costs for everyone independent. Estimates suggest these tariffs will cost the average American family between $2,000 and $4,000 annually. That's not just bad news for household budgets. It's a death knell for consumer spending, the engine of the U.S. economy. 2. Market instability and volatility. The S&P 500 is heavily concentrated. Just 7 companies drive 35% of the index's gains. When they fall, everything follows, and they are falling. The sell-off in tech stocks is eerily reminiscent of the dot-com bubble of 1999. 3. The Federal Reserve's dilemma. With tariffs driving up costs, inflation might stay higher for longer, meaning the Fed is unlikely to cut interest rates anytime soon, leaving businesses struggling and investors bracing for more economic turbulence. 4. Global retaliation. A trade war escalation. China isn't just sitting back. It has threatened counter tariffs on U.S. agricultural goods, a move that could devastate American farmers. Remember the 2018 trade war? Farm bankruptcies surged 20%. During uncertainty, investors typically flock to safe haven assets. Bitcoin initially surged as tariffs ramped up, but then it crashed 25% from its peak. Why? Because crypto has been trading like a triple-leveraged Nasdaq stock. It moves in tandem with risk assets, not against them. Meanwhile, gold is having a moment. The surge in gold investment, driven by fears of stagflation, meaning high inflation and slowing economy, suggests that smart money is hedging against uncertainty. So how can you protect your portfolio? This isn't the time to panic sell. Instead, here's a battle-tested strategy to stay ahead in volatile markets. 1. Keep an emergency fund, 3 to 6 months of expenses. If things go south, cash is king. Don't be forced to sell investments at a loss, just to pay bills. 2. Diversify your holdings, spread risk across multiple sectors. If tech crashes, consumer staples, like Coca-Cola, Procter & Gamble, will help cushion the fall. 3. Keep buying. Dollar cost average, DCA, timing. The market is a fool's game. Stick to a consistent investment strategy and buy dips instead of fearing them. 4. Stay away from margin trading. Borrowing money to invest, a recipe for disaster in volatile markets. Leverage works both ways. And, in times like these, it's better to play defense. 5th, hold gold and defensive assets. Gold, inflation-protected bonds, and even defensive stocks like utilities or healthcare provide stability during economic turmoil. Trump's tariffs aren't just a headline, they're a financial earthquake shaking the entire global economy. For investors, this is a critical moment. Will you panic and sell or prepare and profit? The choice is yours. If this video helped make sense of the chaos, hit like and subscribe for more investment insights. Thanks for watching.